on Startup Street. Now, analytics and AI solutions startup Course5 has completed the second close of its funding round, raising $53 million. While in the first tranche, Course5 had raised $28 million from 361 Asset Management Tech Fund. In the second tranche, it secured $25 million, led by Novama crossover series of funds with participation from Carnelian Asset Advisors. Now, this funding round will help fortify Course5's inorganic growth plans. And joining me in the studio is the chairman and CEO, Ashwin Mittal. Ashwin, thank you so much for joining us in the studio today. Now, like I said, you've raised $53 million. So talk to us about how you plan to spend the money. So inorganic growth plans and building your labs is top of the agenda?
Great, Arundhati, and thank you for inviting me. It's a pleasure to be here on your show. So along with the $53 million that we've raised, we also have our own cash reserves, and we also generate cash ourselves. So we're looking at a total outlay of $100 million in terms of planning. Out of that, we are allocating about $80 million for inorganic growth through acquisitions, certain very strategic acquisitions, and $20 million towards further development of innovation and advanced AI technology that we can leverage for our clients in our AI labs.
All right. So we'll get into the details of your inorganic growth plans in just a bit. But why don't you tell us a little bit of what it is that you have on offer? What are the services that you have on offer? And what are the type of clients that you're catering to at this point?
Sure. So we work with large global corporates.
Right.
Ours is a global business across North America, Europe, Asia, Pacific, Middle East. So we pretty much service clients globally. And we help clients using data science and applied AI technology on their internal and external data assets to help them get predictive insights on what is likely to happen in their sales, in their customer behavior, marketing, supply chain, how they should make certain things happen, what they should do to orchestrate certain outcomes.
Right.
And our focus is on large global corporates. So our client base is, 70% of our business comes from Fortune 500 and Forbes 2000 companies.
Okay. Right. All right. Ashwin, I heard you talking about acquisition. So I really want to understand what is the inorganic growth route forward. Are you in talks with companies, and which kind of companies, what synergies will you be looking at?
Sure. No, great question. So we are looking at two types of acquisition targets. On the one hand, we are looking at companies that have an established base of business and have a specialized capability either in a certain industry vertical or in a certain horizontal area.
Okay.
There we are looking at a sweet spot revenue size of $10 to $20 million of the asset. And the ideal asset should bring us some combination of access to capability, access to IP, access to client base, or some combination thereof. The other type of assets we're looking at are some deep tech AI startups where we can really get in some cutting edge technology in which we don't have today.
All right. So how many companies are you already in talks with? Have you shortlisted any companies that you're looking at? And have you made any acquisitions up until now at this point?
So we are, we have a long list of various companies, but we are in late stage talks with 5 companies.
All right.
And it is our goal to close 2 acquisitions over the next 12 months.
Okay.
In 2 different areas, giving 2 complementary set of capabilities. We recently absorbed Incivis, a small AI startup providing computer vision based AI solutions to optimize and generate advertising content.
All right, so that's the acquisition you made. Now, you've clocked about $50 million in revenue in FY23. So talk to about what are the targets that you've set for yourself for the next financial year? What's profitability looking like? And where will the next leg of growth come from?
Sure. So, fortunately, we're a well-profitable business. Prior to this round of funding, we've built our business completely on our own cash flows without raising any external capital. And the kind of traction we're seeing in terms of adoption of global corporates of AI and data science in their decision making. So there's a huge sort of set of new opportunities that are opening up in our space, and the scale of AI deployments is only increasing and enhancing. So we've grown at about 25 to 30% in the past, but we believe that we will grow at 35% going forward year on year. And combined with inorganic growth, it's our goal to reach a $200 million revenue size in the next 3 years.
Okay, speaking of growth and your future focus, I believe you're also looking to list on the bourses in the next 18 to 24 months. What makes you bullish, and where are you planning to list?
Sure. So, well, we're an Indian domiciled company, so we'd like to list in India. And we've not ruled out overseas options, but we'd like to list in India. That is our primary goal.
And 18 to 24 months, that's happening.
18 to 24 months, and the reason we want to do that is because that's a source of permanent capital. And we are really in this business for long term. We think there is a 10-year value creation journey out there. We want to harvest that journey ourselves. So, we'd like to raise long-term capital, and we've been approached by many investors, asking us when we're going to approach public markets.
Oh, right. So we're going to see that in 18 to 24 months, most likely. You're also present in India, US, UK, UAE. So give us how the revenue mix is. Which is your most favored market? Is India top on that list? And any expansion plans? Any other markets that are interesting to you?
So we service a global client base. So about 75 to 80% of our business revenue comes from North America. Right. And then the balance is from Europe, Asia Pacific, Middle East. Okay. We have a small footprint in India, a small share of our business. We don't see the mix radically changing. We continue to focus on global corporates. And then the Fortune 500 clients we work with, they expect us to serve them in different geographies. So, for example, a few years back, we set up in Latin America, in Mexico and Argentina to service certain corporates. We set up in the Middle East to service certain demands. So we have to go wherever our clients need us.
Right, so making in India and serving the world at this point. But Ashwin, we're completely out of time. And thank you so much for joining us on the show today in the studio with us. And we wish you all the best going forward.
Thank you so much for inviting me. It's been a pleasure.